Welcome to DeFi Crypto today. Our topic today is portfolio management. Very basic stuff. I'm gonna go into great detail, but just give you some basic. A lot of people have been having trouble with their portfolios lately because the stock market tanked everywhere, and the crypto market, tanked. And some people want more stability. So what better way to get stability than using stablecoins? All right. So what I'm recommending is that if you are risk averse, okay, you should follow what I have in my book. This is a page from my book, page 130. The free book you can download. Okay, the link is in the description below. Typically, for people that don't like too much risk and don't like to see their portfolio shrink during a market crash, I recommend to have about 50% of your portfolio in stable coins. But deposit them somewhere that it's going to earn a good return. Okay, a good place to deposit would be Anchor Protocol. Let me show it to you. Anchor Protocol, let's get that. I should have put that up there, but I forgot. Okay, and the web app. So go to earn. All right, so you can get 19.48% on this. It's very reliable. I've used them since June or July this year, and the rate is always at around 19 point something. So I use it as a savings account, okay, so that my stable coins are earning me something while I'm waiting to use them maybe to buy some other coins, invest in other projects, and so on. Okay, so that's where I keep a lot of my money, okay, instead of my savings account at the traditional bank that gives nothing. Okay, this is a real savings account. Okay, it's really good, and it's pretty safe. Over $7.8 billion in there. A lot of people trust this website. So that's where I would put most of my stable coins. There are other places where you can get some really juicy rates. If you go on Beefy, I talked about that in another video. Beefy Finance has really high APYs on stable coins, okay, especially on the Phantom and on the Avalanche networks. You should check those out. Most of the stable coins there get rates over 20%, so really good deals. All right, so don't let your money rot, okay? Let it work for you. You want to make your money work for you. You work hard enough to earn it, make it work hard on its own also. All right, so in here, because we're talking about the Aave strategy, what we did is that we deposited on Aave and we borrowed against it, and that money we used to invest in more risky projects over here. Okay, that's the strategy that I explain in the book. Obviously, Aave doesn't give 20%, okay, but it's a way for you to not touch your stables, borrow against them, and invest what you borrowed in riskier projects. So you keep this part here safe, and you don't borrow too much. You borrow about half of the value of this. This is why it's 25%, so it's half of 50, right? And the 25% extra that you got here, that comes from here, you invest in riskier projects. So you've got low risk pools, those are stable coin pools, but you don't have to put everything in stable coins. That's just an example. Then medium risk pools and high risk pools. And notice that the percentages are very small. Okay, you don't put the majority of your assets in very risky projects, okay, that are not audited and blah blah blah. because they're very risky and you might lose all your money. So don't do that. Okay? Put a tiny part of your portfolio in the super risky projects. Okay? It says 5% here, but that might be 4, 5, 6, 10 different projects, and you just put 1% or 0.5% on each project. Okay? That's how I do it. The riskier projects, I put a tiny bit of my portfolio on it. Tiny bit. Okay? Just in case they fail. If they go down in value, or if they shut down, or they rug pull, I don't lose everything. And by the way, rug pull means the developers stole your money, okay? They take the cash and then they shut down the website and you never hear from them again, okay? Rug pull doesn't mean the project is failing, okay? It doesn't mean that the project is, that the token went down 80% or something. That's not a rug pull, people, okay? Use the right terminology, for Pete's sake, okay? It's very annoying, okay? Every time people lose money, they say it's a rug pull, it's a rug pull, it's a rug pull. It's not a rug pull, okay? A rug pull is when there's a crook that steals your money, shuts down the website, and you never hear from the guy again. Okay? That's a rug pull. There are crooks like that, and you try to avoid them. And that's why you put a tiny bit of money on risky ventures. You try to find an audit. You try to know more about the project before you invest. You use a pie chart. Maybe you say, oh, 50% is too much. Okay, well, choose whatever you think is suitable for you. But make sure you have a reserve of investments that are reasonably stable so that you don't lose everything if the market crashes. A lot of people are getting very nervous these days because the market crashes. They're getting depressed. I saw this guy, what's his name? Chico Crypto or something, and he decided to stop making crypto YouTube videos because he's depressed right now because the market is crashing. I feel bad for the poor guy. I mean, I guess he invested in very risky projects. But, you can invest in risky projects as long as you have a solid base somewhere. It's like a pyramid, okay? You have a solid base of strong assets you believe in, okay, that are there for the long term. It can be a mix of even volatile stuff like Ethereum and Bitcoin and so on. Those assets over the long term, they will go up, okay? A market crash like what we're experiencing now, it's temporary. It might last a month, might last 2 months, might last 3 months. But eventually people wake up and they say, maybe we overreacted a little bit or a lot. So don't worry. Strong assets last and they go up in value over time. Don't lose your mind when you see prices go down 50, 60, 70%. That's nothing. The way I look at it, Bitcoin's a bargain right now, okay? And a lot of tokens are a bargain, okay? I'm buying, okay? Don't get nervous when you see things go down. Of course, sometimes you have bad timing. I have terrible timing. Many times I buy something and the next day it crashes, okay? But it's life. This happens. Anyway, so think about this pie chart. Read my book. You didn't download it. It's free. Download the darn thing. It does a very easy and very low risk strategy. Of course, you're not going to earn 1,000,000% on it, but you can use those yellow and red bands here to put your money on riskier projects like all those own forks that we've been talking about lately, and use that. Could be 5-10% of your portfolio, for instance. Not 100%. Be reasonable and go with your risk appetite. Some people like a lot of risk. They get excited by risk. But if you get excited by risk goes both ways. It goes up and goes down. So don't start crying when it goes down. You wanted the risk. So if you cry every time the market goes down, well, maybe your risk appetite needs to be readjusted, right? Use your head, not just your emotions, okay? Use your head. Plan ahead. Plan in case the market crashes tomorrow. Don't react and say, oh my God, the market crashed, I'm finished. No, don't do that. Plan ahead. And that's why I wrote this book, and that's why I'm explaining this right now, to help you plan. All right. All right. So now a lot of people have invested in several projects and they say, how am I going to keep track of all that? That's difficult, right? Especially if you start diversifying and you got like, I don't know, 10, 15 projects, protocols in your portfolio. It's difficult to keep track of all that. So I often use, this is a sample portfolio. It's just an example that I use for testing and so on. All right. So I use DBank. DBank is very, very useful. It does not have all the protocols. It's got hundreds of them, but doesn't have all of them. And it has quite a few of the own forks, as you can see here. And it's going to list your investments and the price and all that stuff. And you're going to see what's in your wallet as well. So if you got several tokens in your wallet, it's going to show them here. And then it's going to show the protocols, how much money you've got, how much it's worth at the moment, and so on. All right. And if you are on multiple networks, right now I'm just showing the Binance Smart Chain because that's all I've got on this particular wallet. But if my MetaMask is configured for several blockchains like Ethereum, Polygon, Avalanche, whatever, well, all these chains are listed here, and whatever you've got on all those chains, they're going to appear. So you just need to connect your wallet once at the top here, and you're going to see pretty much most of your investments on all these blockchains. There's still some blockchains that are missing. Harmony is not listed there, I don't know why, but it's got most of the other ones. So you can see a good chunk of your portfolio, if not all, depending on where you put your investments and so on. It does not do Terra. For Terra and Cosmos also you should use ApeBoard. I'm putting the links for all this stuff down in the description, okay? Yeah, ApeBoard, you can have multiple wallets listed there. The DBank only takes one wallet. ApeBoard takes multiple wallets. So if you've got multiple MetaMask, you can list them all. If you've got Terra, if you've got Cosmos, if you're on multiple ecosystems, it's going to work also. So they're different, and the problem with ApeBoard, it has a much shorter list of protocols. It's less than 200, while DBank has, I think, 600 or 700 protocols listed. So, you know, there's no perfect portfolio manager out there. Now, there's another one I discovered recently. It's FOMO, and this one is for own forks. So it lists quite a few own forks. Okay, so most likely your home forks are listed there. So all you have to do is select them, okay? So you can highlight like this and it's gonna pop up. And if you have an investment in there, what you need to do, you need to add your wallet address, and it takes multiple wallet addresses. So if you've got 4 or 5 different wallets that you're using, okay, you can add them all here. And it's got quite a bit of data. It's got the price, the time when the next rebase is, the current index, APY, and so on. So there's a pile of information. So it's very useful also if you're trying to figure out the best fork to use. You can figure out, okay, you can look at the market cap, you can look at how much value it's got on it, and then it can help you decide where you want to invest, okay? So that can be a powerful tool as well. All right, so that's about it. The moral of the story, okay, is if you plan ahead, you're gonna survive any kind of market crash, okay? Plan what you want your portfolio to be like. You like to take a lot of risks, and you don't care if the market goes up and down. If you've got if you feel very strong, okay, and you don't care about market fluctuations, they don't faze you, then fine, you can reduce the part of your portfolio that's in stable coins. But if you go nuts when the market goes down, and you have to check the price of your tokens every 5 minutes because you go nuts if you lose any money. Okay, but put a larger share of your portfolio in stablecoin. And don't go around looking for the best deals in terms of APYs on these own forks, okay? First of all, they're not gonna last that long, those super high APYs, okay? It's not possible. Be reasonable. If you're going to chase around these 50-odd own forks, use a small part of your portfolio. I mean, Olympus DAO and Wonderland, they've been around, okay? And the teams behind them are very smart. So maybe on these two, you might want to consider putting a little bit more than on these fly-by-nights here. I'm pretty sure about half of these are going to disappear in the next few months. I don't want them to disappear, but I'm pretty sure they will. Okay? Some of them are going to fail, some of them are going to succeed. Which ones? Well, we're not sure right now because they're all new. Most of these are less than a month old. So just put a tiny bit of your portfolio on these. Find them interesting and you think the team is good and they're getting audited and all that stuff. Some logical criterion to invest. Don't just look at an APY that's too big to pronounce. Okay? That's not a good criterion. All right? Okay, so that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book. I keep talking about it. Download it. Okay? Input your name, your email address, hit the submit button, and then this big fat button that says download the free book. And if you don't want it for free because you don't like free things, you go to Amazon, you give $5.99 to Jeff Bezos, and Jeff will send me a whole $1. Imagine. See ya.